If you're looking for a trading strategy that's simple yet highly accurate, this video might change your portfolio forever. Today, I've come across a small price action technique called the free bar. It's a candlestick that forms entirely outside the Bollinger Bands. At first glance, it might not look much different from a regular candlestick, but when I actually tested it on the 4-hour gold chart from the beginning of 2021 to 2025, the results were truly amazing. It was able to generate over 200% profit with high accuracy, up to 71%. And of course, I didn't code the indicator myself. I used ChatGPT as an assistant to help create a free bar indicator, which you can use for free. I'll post the script in the comments below. All I ask is that you give it a like and a share, just one like and one share each. And as always, you don't have to take my word for it, but trust the statistics. Let's take a look at the actual historical stats first, and then we'll dive deep into the full trading rules of this strategy. If you're ready, let's go. That wraps up the 4-year backtest on the gold chart, 4-hour time frame, using Tickmill broker with an FCA license from the UK. When it comes to Tier 1 global Forex safety standards, Tickmill broker really stands out. Plus, their spreads and commissions are extremely low. That's why I mainly use Tickmill broker myself. Okay, let's take a look at the statistics to see what happened and whether this system is worth using in terms of profit and risk. You can decide for yourself. I'm just showing you the test results. I use the risk per trade of 5%. The starting capital is $10,000, with the risk per trade R set at 1.5 times as usual. You'll notice here that the win rate is high, about 71.88%, which is over 70%. This system has a very high win rate, meaning that if you take 10 trades, you have a chance to win 7 of them and make a profit. The total return is 232.59%. There were 32 trades in total. Some of you might feel that's not a lot, so I recommend adapting the system and using it to trade with other pairs as well. That way, the total number of trades will increase. But don't forget that you must always conduct statistical testing before using it in real trading. That's why the profit factor is so high, at 3.83. The maximum drawdown for gold on the 4-hour time frame isn't high either, only 14.26%. This is a system with a long statistical track record, having gone through all market conditions over the past 4 years in the gold market. This shows that there's a good chance it will continue to perform well in the long run. As for the free bar strategy, what is it and how does it work? For those of you who don't know yet, please stay tuned. Watch the next part for more, including the trading setup. If you had an AI trading for you 24 hours a day with a system to protect your account from being wiped out, would you dare to try it? This is Forex Hunter AI, an AI that has been active in the real market for over 3 years, consistently generating profits and offering stability with low risk. The system includes both manual and auto stop features when the drawdown reaches 30%. There are over 10 real users, both in Thailand and around the world. It was developed by a team of engineers with more than 14 years of experience in the Forex market. You can install the trading robot yourself or have our team install it for you. Special promotion today, from the regular price of 22 baht, now only 13 baht. And that's not all. You can pay in installments at 0% interest for up to 10 months, which comes out to just 300 baht per month. Message us today and type "interested in AI" to receive details and the 13 baht promotion right away. AI Forex Sumpers let the AI system make money for you. What is a free bar candlestick? It refers to a candlestick that is independent, or in other words, one that has broken out and moved away from the Bollinger Band. For example, in this area, can you see that the candlestick has moved outside the Bollinger Band? This means that there is no high or low of the candlestick touching the Bollinger Band at all. This is in the case of a downtrend, but in the case of an uptrend, here, these are all free bar candlesticks 1, 2, and 3. Why? Because the candlesticks have moved outside the Bollinger Band. This is a free form, which is a free bar. No part of the candlestick touches the upper band of the Bollinger Band, so this is an alert arrow for the free bar. Both in the case of an uptrend and a downtrend like this is the form of a free bar, friends. Don't worry. I will paste the script of the free bar for friends. Friends can paste this script into the TradingView in the indicator section, and you can use it right here. They break out right away. As for the settings, there's the Bollinger Band value. You always have to consider the breakout together with the Bollinger Band or BB. I use a period of 30 and the multiplier is set to 2, or in other words, the standard deviation. Another indicator we'll use in the trading setup is the EMA. Today, I'm using an EMA period of 400. You can set it just like I do for 100. Now, let's look at the trading strategy. It's very simple, both for uptrends and downtrends. Now, let's get to the 4 steps of trading. You can follow along with me. I'll go slowly but clearly. If you miss anything, you can always review it because this video is on YouTube. You can watch it as many times as you want and there's no cost, okay? Step 1, I use the EMA 400. It's simple and straightforward. If the candlestick is above the EMA 400 like this, I'll only look for buys. But if it's below, I'll only look for sells. Let's look at an example of an uptrend. Moving on to step 2, so that's step 1 done in the case of an uptrend. Step 2, I wait for a free bar to appear. Whenever a free bar forms, there will be an alert like this with an upward arrow like this. For anyone who doesn't have the free bar alert indicator yet, I'll post the link under the comments. But don't forget, I'd like everyone to give 1 like and 1 share. That's all I ask. I'll put it in the comments for you. So what is a free bar? It's a candlestick that breaks out from the Bollinger Bands, meaning that no part of it touches the Bollinger Bands at all. That's what we call a free bar. There's a very high chance that it will reverse and go up. This is step 2. Once you spot step 2 and you want to ride the trend upward, what kind of candlestick do you need to wait for next? It should be a bullish candlestick or a green candle that closes back inside the Bollinger Bands or closes above the lower Bollinger Band. But here's the principle. Don't just keep waiting endlessly. Make a good note of this. You should wait no more than 10 candles after the free bar appears. Start counting from the free bar. 1, 2, 3. Has it closed back inside yet? Please help me check. Yes. It has closed back inside, right? So this is step 3. This is number 3. Therefore, there's a tendency that after the free bar appears, the accuracy is about 70%. This setup happens quite often, but there's still a chance of losing. So don't go all in or use your entire capital. Don't do that. Once you've completed step 3, you can proceed to place an order in step 4. You do this by opening an order at the setup candlestick and set your stop loss at the low of the setup candle at 1.5 times the distance. After that, carefully calculate your risk and then go ahead and open the trade. This way, you hit your take profit. See, if you want to learn more about this strategy, what should you do next? It's not difficult at all. Just wait until a free bar appears here, and then you can start paying attention because the price is starting to move and is now hovering around the lower Bollinger Band. And then a free bar appears. Whenever a free bar forms, there's a high chance of making a profit with this technique, especially in gold trading. Once you spot a free bar, don't forget, what do you do next? Count how many candles? 10 candles. There must be a green candle that closes inside the lower Bollinger Band, closing higher. In this case, it only took 1 or 2 candles to find an important one, which is this particular candle. So if you see a candle with strong buying pressure, you can open a buy position right away. Set your stop loss at the low below, allowing for a small buffer. Here, we've successfully closed another TP. See? Friends, isn't it easy? This is a real live example. You only need to pay attention to the free bar at the bottom area and only if it's a green candle. As for the free bar at the top, we use that for trading in sell cases. Now, let's take a look at the sell side. Moving on to the sell setup. Step 1 is very simple, especially for those who are new and don't know much yet. Just focus mainly on the EMA filter, so you know whether you have an advantage trading buy or sell. For example, the current candle. You notice that the candle closes below the EMA 400, right? So on the sell side, that's your first advantage. For the second sell step, you need to wait for a free bar candle. But this time, the free bar must appear above, like this. Here you can see the free bar is a candle that breaks out above. When you see this, it's considered a reversal signal for a further drop. But that's not all. As I've taught before, you need to count 10 candles. There must be a candle that closes back in within the Bollinger Bands. You only need to wait for just 1 candle to close back inside. So the momentum after this point has a chance to move down with a 70% win rate. As I said, you don't have to take my word for it. Trust the statistical results I've already provided. If you haven't seen the first part, go back and watch it. When you see this setup, you can open a sell position right away. Place your stop loss at the high just in case there's a slight fluctuation. 1.5 times. See, it's done, right? Just a moment and you've already taken your profit. If you want to enter again, what should you do? You have to wait until a free bar appears above like this. A free bar below doesn't count. A free bar below like this doesn't count either. Just keep your hands still. All right, we found a free bar now, and it has also broken out through the upper band. This suggests a tendency to go down. When we see this, what do? Wait first. Wait until you count 10 bars, right? Because if more than 10 bars pass and there still isn't a candlestick with downward momentum, it means there's a chance for a reversal, a change in direction that could turn into an uptrend, so we won't fail. Okay, now we found an important candlestick. The closing price has come back inside the band, so we have to sell right away. The probability ladder here is 70%. Give it a try, everyone. All done. This time, we hit the remaining 30%, which means a loss. This is a backtest, so let's mark it with the red line. Take a look here, we've lost. So what do we do next? We have to keep trading. If we encounter a candlestick that fits our gap criteria, like this free bar here, and then we get another free bar, some of you might feel hesitant and choose not to trade at this point. That's the reason why, even when people trade the same system, their profits aren't the same. Let's see, so far, there hasn't been any candlestick that closes lower yet, except for this candlestick, which has now closed lower. So you can go ahead and open a sell position following the trend. Set your stop loss above with a risk reward ratio of 0.5. After the free bar, count 10 bars forward, 1, 2, 3. This is within our criteria. Here, you can trade the reversal and take profit once again. That's why I say some people get scared if they lose just once, they stop trading altogether. They don't keep following the steps or the statistics, and as a result, they miss out on profit opportunities, even though they're using the same system as everyone else, or even as myself. It will always be like this, whether it's the cash flow system I've been teaching for over 14 years, or the ultimate gold class, advanced expert class, or whatever. For those of you who are still trading, many of you have already passed the fund assessment successfully. But there are also many others who have learned the same system, yet wonder why they don't make profits like everyone else. It's because of situations like this losing just one trade and then quitting right away. When the next opportunity comes, they don't take it. This kind of behavior means you're not following the stats, not following the statistics. You can't blame anyone else for that. We have to keep working on our trading psychology. I want you to understand this. In this video, I want to leave you with this thought. A good strategy doesn't need to have 10 different indicators. All you need is just one killer price action setup, and you have to enter at the right moment. For example, the free bar strategy I shared today is one of the simplest strategies, yet it delivers results that I would call professional level because it can consistently beat the market for 4 years now. And don't forget, the most important thing is your own discipline. Train yourself to be mindful, and I'll see you in the next video. Please subscribe to the Shankar School channel as well. That's all for today's video. Let me sign off for now. See you in the next episode, which will be even more exciting for sure. Goodbye.